Okay, so what's up, YouTube? This probably my fourth time trying to remake this video. Hopefully this fourth time a charm and I can get this content to you all that I've been saying that I was gonna put out. But basically this is one of the funding companies that I like to use. It's Apex Trader Funding. And what they do is they allow you to use their capital if you can pass an eval. So basically, a test showing them that you can trade and you can make profits. And once you show them that you can trade and you can make profits, they give you access to a 25K account, a 50K account, or even 100K. But I've only used the 50K and the 25K. So right now, they're having an 80% off sale, and I got them when it was a 90% off sale. So I paid about $14 for the eval. So this shouldn't be too much more because it's 80. So it shouldn't be too much, no more than about $30 for the eval, $20 for the eval. So let's go down. Let's go down to some of the things. And they have a why choose our funding program. I won't read through all of them, but I'll go through some of them. You will receive 100% of the first 25K per account and 90% beyond that. And you can request a payout every 8 days. Another thing, you just trade your normal system. You can trade it during news, one step evaluation process. So what this means is all you have to do is reach the profit target of $1,500, and then you'll be okay to get a PA account. And it's just when they move you to an actual funded account and you're not in the demo test mode anymore. And one of the best things about Apex is you can get up to 20 accounts. So let's say you was trading with your real money and you had limited capital and you only had $200, or and you made $200 on the trade. You only have that $200. But if you have 20 Apex accounts and you make $200 on one account, you can also have make that same 200 across 20 accounts with copy trade, where it is all of the trades that you take on this one account or go for the other 20. And instead of just making $200, you'll make $200 times 20 accounts. And that allows you to scale way more than you would be able to do with your real capital. So we can go down a little bit. And I want to actually, because this one, it moves. Let's see, do it move here? Yeah, it moves. So I screenshotted it so I could pull up the Apex. Let's see. Which one of these is the Apex? I think it's this one. Yeah, I wanted to pull this up so I could show you have the 25K account and the 50K accounts. These are the ones I have experience on. So these are the ones that I'm going to talk about. So with the 25K account, you can trade with 4 mini contracts. And mini contracts, this is dealing with futures. So with mini contracts, you make $20 per point. So every point will be $20. And with micros, every point will be $2. So you can trade more micros. And I like to actually trade micros because you can scale more. You can start with more contracts. And as the trades start going your way, you can start cutting them. Versus with these minis, they make a lot more faster, but they're way more risky. You can lose a lot fast, and it's harder to scale with only being able to trade with 4 minis. But in essence, all you have to do for the eval to pass the test is make $1,500, and which is not hard. You can make this $1,500 in a day, and it shouldn't take you any longer than one. It shouldn't take you any longer than one day. I think these 25K accounts and 50K accounts, they're no more than 187 and 197 a month. Those are the prices. But you remember I showed you the 80% off sale. So you can do the math on that and see that you will only be paying like $20 a month. But you should not be in these evals for months on months on months, steady paying a monthly fee. Because once you pass the eval, you no longer have to pay a monthly fee. You then move to your PA account and you have to pay an activation fee, which will be like 150. I paid like 105 for mine. So all in, you'll be all in for no more than 175 versus with your own capital. 175 will be so limited versus being able to trade with a funded account. You have way more range, way more profits you have to do. Yes, you have to deal with the prop firm rules, but that's okay. So if you have the 50K account, your profit target would be 3,000. You have to make 3,000 before losing 2,500, which is also not hard to do. You can, with this 50K account, you can also make that 3,000 in a day or two. It shouldn't take too long. You can make it in a couple days. It's not that long if you have a good strategy. And on this channel, I will be teaching my exact strategy that I used in order to get funded, and I will go over it in a second. And I know once I go over my strategy, it might go over your head. So I will make more videos explaining every step of my strategy, like, because I will talk about things that's called fair value gaps. And I know a lot of people probably be like, what is even a fair value gap? But once I break everything down video by video, it'll all make sense, because I know some people don't even know how to read a candlestick, which is very easy. And I'll make videos on that. And if you have suggestions after watching this video, just leave it in the comments and I'll elaborate or make more videos on that. So what I like to do, this right here is an hourly time frame. So on this hourly time frame, each candle represents an hour. And I like to wait for a liquidity sweep of this on this hourly time frame, which we got here. This right here swept these candles over here. So once we got this liquidity sweep, what I know is happening is the market is stopping these people out over here. These people who enter here are getting stopped out. And some people will see the price coming down right here and be thinking, oh, it's going to be a breakout. And they think it's going to go lower. But me, I have clues and signs that tells me that the market is going to want to reverse. So the first thing I like to do is look for a liquidity sweep. And let me go back and bring up my diagram. So we have this right here. It's called the one setup for life. And you'll notice that a lot of my trades will look exactly like this, where it says we're looking for a stop hunt. That's exactly what I'm looking for. This would be an hourly stop hunt. We want to see price come down, stop people out. And once it stop people out, we want to see it come up and close above this fair value gap. This is a fair value gap. All a fair value gap is a gap in between candles. You see this big empty space? This is a fair value gap. And how a lot of traders like to trade fair value gaps, when they see price coming to this box, they think price is going to go lower. But I like to wait for confirmation. What I like to do is I like to see us actually close above this box. I like to see us close above here. And once we close above here, I know we no longer have to worry about it going down. Sometimes it still will go down, but I have rules on what tells me like, okay, yeah, this probably isn't going to go down any lower. So once we get this close above here, now I'm confident to enter for longs. And let me pull this back up. So right here, we're on this hourly. I'm going to go down to I usually go down to the 5 minute first and see, do I see anything on the 5 minute? And this, the 5 minute, each candle represents 5 minutes. And it's really the same thing. It's just more to the picture that you can see when you go to drop down to a lower time frame. So we still have this liquidity sweep that happened where it came down and it stopped these people out. And I know it's a lot of traders, a lot of people when they first start out, I feel like the market is even, I feel like the market is hunting for me, or it's always messing with me, because people exit a trade, and as soon as they exit, it started going back the other direction. So that's when I went and learned that it's a reason that that happens. It's obvious to see where retail traders will place their stops, because if you enter here and it start going in your direction, you're gonna kind of want to go break even and not want to. You're gonna put your stop loss below here. It's gonna be right here, so you don't want to lose no more than this. So that's where the market makers come in and they will stop you out. So what I'm looking for is an inversion fair value gap. And it's pretty simple. Let's see, can I find it? Find it again. It's pretty simple. So still this line is that liquidity sweep. And let me draw my inversion fair value gap. And remember, I said a fair value gap is nothing but gaps in between candles. So we have a gap here and we have a gap all the way down to here. So the first thing I want to see, since I have these gaps, the first thing I want to do is see a candle close above this gap. And once a candle closes above this gap, I'm going to enter. Let's find this. I'm going to enter where that candle closed at above this gap. I'm going to place my stop loss here. And when I'm looking for targets, I want to look for somewhere on the chart that has equal highs. So let me show you that. Like you see, we have a lot of equal highs. Like we have structure here that's equal, where the market decided it didn't want to go any higher. It just was consolidating here and then push down. That would be my target. So I would target up to here, and that's for like that would be like a 3-to-1 trade. And another thing that also helps me with my trades is when I can draw a trend line, like this over things, when I can draw this type of trend line, I know once I see these trend lines that the market likes to slice through this like butter. Once you're able to draw a trend line and you see that slope of it going down like this, the market usually likes to come up and it will move fast in the direction of your target. And let me show you an example to show you that this is something that's easy to identify if you study. Let's see, I think this is the one. Like if you look here, it's the exact same thing that I was just showing, that we got that right here where it says sell side liquidity. That would have been my 1 hour level that price came down into and then decided to reverse in my inversion fair value gap. And we got that trend line liquidity, which is low resistance liquidity, which just means price will not have a hard time breaking through this. And then we have that buy side liquidity, those equal highs up there, which we have here that we wanted to target. Like I said, I know hearing this for the first time, some of this can go over your head, but once you learn it step by step, and we take it step by step, like learning what is a fair value gap, how to break down the candle, what is liquidity, what is trend line liquidity, what is trend line what is low resistance liquidity. Once you learn all these things step by step, it all goes together and it's very easy once you put it all together. So if you have any questions or any recommendations how I can make these videos better, just let me know and I'll do my best to answer them and make new videos on this.